Welcome to TradeTheMBA.com. This is John. This report is for the 30th, and well, the Fed recognized that it had gone too far with their quantitative tightening, um, at least from the number standpoint of weakening numbers from job growth. Uh, we can find all sorts of other reasons for it, but that being said, the inflation hangover still lingering, but nothing's been completely resolved, and you still have, of course, their expected inflationary tariff stuff. That if they hadn't held on to that, they probably would have stopped the tightening sooner, and that would have supported things. But they're just getting around to it, and it's taking their time. Nothing tragic from an MDI reading here from that standpoint, but you did see the weakness developing here with the spider that was developing at the beginning of the day that we saw uh, from a DOC standpoint, where cyan crosses over the green right there. And again, it becomes critical in the shakeout because you've got to continue that positive. And, if you don't see a significant hold right here, that could be problematic for this breakout move, in which case you would expect to see that fill back into this breakout mode. And that typically is more expressed here in the NASDAQ, where we already knew we had positive extremes that are going to need to get filled back into. The NASDAQ held up much better, and it's more appropriate with the readings there. And you're just now getting to that transition point of well, you got a DOC fade, you've got the cyan rising, you still have cyan under red. So you can see the complication building here to the end of the month from a confusion standpoint. With the Fed cut, though, we're likely to see a drop off in volatility going into November. So that will be pleasant for some people to hear. Um, it's going to be relative, but you're also into the seasonal bias to the upside. And of course, everyone then is going to be switching to retail sales and watching that category. And of course, there's your treasury situation. They had already baked in. The expectation was clear. Oil, we're back down to where we were at that threshold breakout. That's got to continue lower. If it doesn't, it's problematic in a lot of different ways, particularly when it comes to, at least my view, of growth estimates for next year and whether they'll be sustainable or not. And that's a significant thing because the potential has been there, but you needed to see energy prices fall. And then we needed also, as I was talking about, to watch that bifurcation in energy costs to individual consumers from this whole AI debt circle that's being created. That's going to be quite interesting, especially now with the way Oracle has gone into leveraging that debt versus the others. So, there's complications that are building, and a lot of the exuberance is going to get wiped out. Does the easing help? Yeah, sure, it just extends it, but doesn't stop whether it's going to take place or not. It's just a transitional situation. From a gold standpoint, yeah, it's holding up above the 50, even though it's within that weakness. You're just now potentially seeing the next rebound start finally to begin, but you've erased all of your extreme conditions from it. So the fact that it filled in, a big chunk of the positive extremes, at least going back to the mid portion right here, was pretty healthy. So, from an institutional standpoint, you move and then a 50% retrace, and then you're clear for your next leg. But it doesn't change. The money goes in, flips out, moves to the next thing, and then switches. And we've seen the same thing happen with Bitcoin. We've seen the same thing happen with ETH, and then they moved into gold. Just the rotations. So you can still see that huge weakness potential for Bitcoin built into those readings. Same thing with ETH. The MBI white spikes breaks down with the magenta under yellow, all ugly. From our early read during the day, you can see that we started out, we were still doing okay with the magenta. It started making lower peaks successively, successively following the increase in rise price. That's represented here also, the shakeout declining, not matching higher highs with higher highs, and that's where you get your divergence. So as soon as you get your clean DOC spread, which was right about there, the handwriting was on the wall as far as where that was going to go. You'd already broke below your 25. You're just waiting for MBI white to move, and as it started to, that's when the cascade to the 50% happened. Nice support there because you came back above with magenta over yellow right after it, and that was enough to support it going across. And then the squeezing of the Morganacci lines here, giving you a raised 50% value in that, and that's pretty much where we're stuck in right now. From a positive extreme standpoint, you had the breakout move that was right here. We didn't get to any of that, so we moved into this much higher range right here, which was the ones that were covered, and that covered all of these positive extremes going back. So again, a similar thing that we see with gold. It releases the pressure, allows it to continue, and all set. From an intraday standpoint, boom, they just played with those options. Then the put buyers, too many of them, that flipped it back to calls, and then we move into the Asian session. It was bright and sunny, and then the Europeans woke up in a sour mood, and that's what we're dealing with right now. It looks like they might be recovering, but it's a little rainy here, so you got to go with it. As always, though, anything relevant I put in our team chat. We've got indicators for November coming out, and I think that we might see a flip side of the coin for November from the excitement of October, not just a volatility, but direction. So that's going to be an interesting one. As always, though, trade well. Have a good one.